Many Americans have had inflation on their minds for a long time now, and this is because inflation in 2020 and 2021 has been going up, and that means that prices have been going up too. And the big question that investors, Americans, and one that we've been asking on this very channel is how long this level of heightened inflation is going to last for. Is inflation going to start going down in 2022? Well, the first sign from the Consumer Price Index is showing that inflation for December 2021 actually hit a new record high again. Inflation in December of 2021 was at 7%. This is up from the 6.8% that we saw back in November of last year. Not only that, but this is our highest level of inflation that we've seen since 1982. That is 40 years ago. So with the December 2021 Consumer Price Index being released today, I wanted to take a minute to talk about how prices have increased month over month, what investors are starting to think about that, and what can be done about our inflation issue in 2022. Because again, the numbers are pretty crazy. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. Let's jump directly into the numbers here. Inflation rose by around 0.4% from November to December 2021. It hit an all-time high of around 7%, and we haven't seen numbers like that since 1982. If you look at the core CPI, which excludes food and energy prices, inflation was at around 5.5%. Of course, that's year over year, and it increased by around 0.6% month over month, so from November to December. And of course, this was a record too. We haven't seen core inflation quite this high since 1991. So it's been a very long time since inflation has been this high in our country. But let's get into the nitty-gritty here and talk about what is actually going up as far as price. Housing prices are going up, food and energy is going up, but what actually led the charge back in December 2021? Housing prices in general have been going up. The price of a new home has rose, and housing costs just in America are rising very fast. For the entire year of 2021, shelter costs or housing costs rose by 4.1%. And just from December to November, that number rose by around 0.4%. So I'm sure you're starting to see a theme here. Here is one of the craziest numbers though. Used vehicle costs went up by around 3.5% just for the month from November to December. And for the entire year of 2021, get this, used vehicle prices went up a whopping 37.5%. Food prices specifically rose by around 0.5% from November to December, and overall in 2021, food prices were up by 6.3%, but it wasn't all bad news. Energy prices actually went down in December of 2021. Energy prices in general declined by around 0.4% between November and December. Fuel oil was actually down by 2.4%, and gasoline fell by around 0.5%. Overall, for the entire year of 2021, energy costs exploded in the United States. They rose a whopping 29.3%, and gasoline alone is up by 49%. And like I said, this is record inflation. We haven't seen inflation like this in around 40 years, and when we saw inflation quite this high, it was at around 10 to 13%. So inflation right now is definitely elevated. However, it is not nearly as high as it has been in the past, like in the late 70s and early 80s. But that doesn't really mean that it's making Americans feel good about paying more for all of the same things. I mean, that is exactly what inflation is. Inflation means that the monetary supply of a country is starting to increase. Now, alone in a vacuum, that doesn't really mean much. I mean, just printing more dollars doesn't mean that those dollars are getting used. However, in our country, those dollars usually are used. So when the United States Federal Reserve decides that it wants to print additional dollars, you're going to see an elevated level of inflation. And over the last 2 years, the Federal Reserve has printed a ton of money. Now, the reason for all of the money printing was directly related to the pandemic. We didn't know how long the pandemic was going to last for, and we didn't know how long businesses were going to be able to pay their employees. If people aren't working, then they can't go out and buy things. And if people aren't buying things, then that hurts businesses. So it's kind of like a circle of empty wallets here. So to directly stimulate our economy and kind of allow people to spend more money naturally, the United States government and the Federal Reserve decided to print trillions of dollars. This was trillions of dollars in the form of stimulus payments, the Paycheck Protection Program for businesses, extended unemployment benefits, and Americans were going to be saving a lot of money because the federal government actually had some pauses on mandatory payments for rent and mortgages and also federal student loans. So there was a lot of reason to spend money in 2020 and in 2021, and that meant that records were being broken on the New York Stock Exchange and for companies and for businesses all throughout the United States and the world. There was a lot of money circulating throughout our economy and a lot of money being spent. And at first, one could argue for the majority of Americans, things were good. I mean, there wasn't really that high of inflation because suppliers hadn't really ran out of anything yet. I mean, as people started to buy more, suppliers eventually started to have less and less things. That is one of the big reasons why inflation is so high right now. One of those things is something that Federal Reserve Chairman Jerome Powell has talked a lot about over the past few months. And the reason that Jerome Powell has talked a lot about supply chain issues is because supply chain issues were caused by the demand that we have in our society today. And the demand was caused by the Federal Reserve printing trillions of dollars. I mean, if we didn't have all of this money circulating throughout our economy, if we didn't have very low interest rates, near 0%, then we probably wouldn't have as heightened demand for just about everything in our country. And what exactly is the big deal with inflation in general? I mean, what is the big deal with the United States Federal Reserve printing more money? I mean, the government prints money all the time, right? Well, yes, the US government and the Federal Reserve prints money all the time. The Federal Reserve considers inflation to be a good thing when it is at a controlled level of around 1 to 3%. When it is at this level, that actually shows that your economy is kind of growing. The reason it's growing is because there is a more need for money. You have to print more, which means more people can have money, which means more spending. But over time, though, all of this additional spending is actually what is bad about inflation. Like I said, we are facing some supply chain issues right now. A lot of our supply chain issues were caused by the pandemic. As I said before, in March of 2020, the pandemic started and nobody knew if businesses were going to survive, if people were going to be making money. So the Federal Reserve decided to step in. However, businesses were still going to have to shut down. This was because of economic lockdowns and social distancing orders. With everything shutting down for months at a time, that meant that businesses were getting behind on everything. I mean, I remember back in the mid part of 2020, I actually tried to order some furniture. And the place that I ordered the furniture from was not sure when I was going to get my order or if the factory was even open because nobody was communicating, nobody was working, and nothing was getting sold. Businesses at pretty much every level of the supply chain were suffering. And in the short term, the stimulus actually helped. That way people could go out and be incentivized to spend their money. Businesses ultimately benefited from that too, but now you have supply chain issues because even though businesses have opened up, there's still not enough to go around. Everybody has so much money right now and everybody is spending. In fact, by the end of December 2021, our unemployment rate was around 3.9%. That is a super low level, which means there are Americans all throughout the country who are employed. They're getting that steady income and they're spending their money. And this big inflation problem really wouldn't be that big of a deal if the price of things throughout our economy didn't really change. But unfortunately, prices do have to change because companies and businesses have to start producing more in order to meet demand. If Americans are willing to spend a ton of money and they go to the store and they can't buy anything, well, that is bad for our economy because now Americans aren't spending their money. They're just holding on to it. So businesses have to create more, and all of that creating comes at a cost. It comes at a cost of hiring more workers, building more factories, delivering more goods, and so on. And every time the price of something goes up, that means the value of every dollar in the economy starts to go down. So basically it works like this. If you have, say, a gallon of milk and that costs $1, well, if you have $1, then everything's great. However, if that same gallon of milk 1 year later costs around $2, and you only have $1, well, that is not a good situation. You now need more money in order to buy the same exact thing. So the goods and services aren't changing. The only thing that's changing is the money that you need. And that is exactly how it works. Like, let me give you another example here. If there is $100 in our economy and you have around $1, then that means you hold 1% of all of the wealth within our economy. That's pretty great, except for when the Federal Reserve decides that we need an additional $100. If this were to happen, you no longer have the same value and the same amount that you did before. Technically, you still have $1, but that same $1 isn't worth as much. There's more money now. More people are going to have more money. You only hold around 0.5% at this point. So in order to buy the same amount of things, you need $2. Now imagine how this works on a scale of trillions of dollars. And I know what you're thinking. Well, the easy solution here is to just start paying workers more, but this actually contributes to inflation in general. And we actually saw, according to the CPI, wages go up in December and in 2021 in general. For the month of December, real hourly wages actually only went up by around 0.1%, while inflation went up by around 0.4%. And honestly, I'm not much of a math guy, but I think 0.1 is a lot less than 0.4, which means even though people did start to make a little bit more money, it is not nearly enough to cover the cost of inflation. And we saw this over the entire year of 2021. Earnings per worker actually declined by around 2.4%. So even though workers are being paid slightly more every single month, it's not really mattering because inflation is going up way too fast. And that is ultimately why Americans are worried about inflation right now, because everything is starting to cost more, and at their job, they're not making any more money. And Americans are starting to realize this, which is exactly why we have things like the Great Resignation and a labor shortage right now. You had around 4.5 million Americans quit their job in November of 2021, and you had another 4+ million Americans quit their job in August and September of 2021 as well. And remember, these are quits, which means a lot of these people quitting their jobs are completely voluntary. And part of the reason why Americans are quitting their jobs is because of inflation. If you're working at a job and you're putting in 40+ hours a week and you still can't afford to put food on your table and you can't afford to have daycare for your kids, then why would you want to work 40+ hours a week? You're not going to want to. So a lot of Americans quit their jobs in search of a better one, especially from employers who A, were not treating them right in the first place, and B, were not compensating them right as well. And that is a great thing for our workers. I think ultimately people quitting their jobs and people going and finding jobs that they're passionate about and jobs that their employers don't manipulate them and actually give them really solid benefits is an awesome thing. And I think eventually employers are going to have to see that, meet employees halfway in order to get that labor shortage solved. But in the short term, it is negatively affecting our economy and amplifying our supply chain issues. And all of that is making inflation continue to explode, because basically when you have a shortage of workers, now companies can't create as many things. They have to slow down their production. And if Americans still have a ton of money, then that means that they're not able to buy the things that they want. That slows down businesses, and that slows down people because they don't have as many things. People are going to start saving more money just because there's nothing to buy. Companies need to survive through this though. I mean, some companies are ultimately going to fail because they just can't keep up with the supply and demand, and honestly weren't managed right in the first place. But at the same time, there are good companies out there that are actually suffering because of this labor shortage and Great Resignation. These businesses need people in order to function, so they're going to have to make prices a little bit higher in order to continue to bring in those profits and pay the people that they currently have. We don't want to see any more layoffs and firings like we did back in March and April of 2020. Remember, in 2020, the unemployment rate hit a record high of around 15%. We hadn't seen an unemployment rate like that since the Great Depression. Now things bounce bounced back because of the Federal Reserve and our federal government, but there's nothing stopping that from happening again if this labor shortage and great resignation continues to build. And wages not going up to meet inflation is only going to hurt the situation. I mean, normally employers will give each employee around a 2 to 3% raise every single year. And if you remember, this is what is considered a healthy rate for inflation by the Federal Reserve. 2 to 3% inflation, 2 to 3% raise every year. So at your job, you technically are making more money, but everything around you is going up, so you don't actually really make more because you're not able to buy more. Remember, the buying power and the value of your dollars goes down as more money is printed by the Federal Reserve. And of course, all of that could just be amplified by our pandemic, which really isn't going away. Around 1.5 million Americans contracted the new Omicron variant on January 10th, 2022. That is a new single-day high. Some experts believe that this new Omicron variant is a lot less deadly than the previous variants that we've seen, but nobody really knows for certain just yet. Obviously, the situation is a lot different compared to what we saw in parts of 2021 and 2020. We have a vaccine now. We know a lot more about the virus, and we have a lot of economic stimulus in place. However, the federal government and the Federal Reserve is finally ready to start dropping inflation in our country. Jerome Powell actually had a nomination hearing before Senate on January 11th, 2022. And the Senate basically asked Jerome Powell about what the Federal Reserve has done in the past 2 years and what they are now going to do in order to combat inflation in 2022. And Jerome Powell basically said that if inflation continues to get worse, and the Federal Reserve will use all of its powers and tools available in order to curb inflation in our country. That means drop it. One thing the Federal Reserve can do is raise its benchmark interest rates above 0%. It dropped its benchmark interest rates in 2020 in order to incentivize people to go out and spend. If interest rates are super low, then you could save hundreds, if not hundreds of thousands of dollars on a loan, like a mortgage or a car loan. People are going out and buying things, and that's great for our economy, but now inflation is super high. So what the Federal Reserve wants to do is reduce demand. There's not really much they can do about our supply chains. Our supply chains are managed by private industries. Federal government can't control them. However, there's a lot they can do in terms of demand. The only reason demand was so high in the first place is because there was an additional trillions of dollars circulating throughout our economy. So if that money starts disappearing, then demand will naturally drop too. They have said that they're going to raise their benchmark interest rates at least 3 times in 2022. However, some experts believe that this could go up to 4 times this year because inflation is only going to get worse. In fact, according to a poll by CNBC, around 50% of investors believe that we are going to see 4 interest rate hikes in 2022. And in 2023 and 2024, we'll most likely start to see more as our economy and pandemic starts to recover. And what that basically means is our economy is going to start shrinking and slow down. Now, you got to remember, an economy shrinking when it's at this high of an elevated rate can be a good thing. According to Jerome Powell, our economy is not functioning at a normal rate right now. So dropping demand and raising benchmark interest rates will hopefully bring it back to that normal level. They're also going to stop a lot of the bond buying and asset purchasing that they've been pouring into Wall Street. That means a lot of the billions and trillions of dollars that we've seen is going to go away too. Ultimately, that could curve prices in just about every market. Food, grocery prices can naturally go back down because people won't have as much money to go out and spend. Housing prices will go down too because not as many people can afford to get a mortgage anymore. And also you might start to see auto prices go down as well, especially for new and used vehicles because now you can't go out and get a loan all that easily. Now the Federal Reserve is eyeing an inflation rate of around 2.5% for the entire year of 2022. So inflation rose by 7% in 2021. It's still expected to rise in 2022, but by only around 2.5%. And eventually companies and businesses will figure it out and start paying people a higher wage. That way people stop quitting en masse, and they'll also start giving them a lot more benefits so that way we can start to see overall wages and salaries increased in the United States. This will hopefully lead to a lot less quits in the US and companies creating more goods and services for people to buy. And with people spending a lot less and companies producing more, eventually you'll have an equilibrium in that market. So our supply chain issues hopefully will settle themselves out very soon. And once they do that, you'll hopefully start to see inflation level out too. So that means that the price of everything in our economy is not drastically going up every single month. But I want to hear exactly what you think about this new consumer price index and inflation within our country. Do you think that inflation is going to continue to rise in 2022? Or do you think that moves by the Federal Reserve and companies and businesses all throughout the United States will actually make inflation start to drop this year? In addition, how do you think our economy overall is going to fare in 2022? Will we start seeing a booming economy again, or will things just level out or actually start to decrease by the end of this year? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.